Hello everybody, so this video is entitled MSTR stock, Bitcoin has won plus back to work, i.e. back to buying for MSTR stock. So of course Bitcoin has won is a reference to the new pinned tweet of Saylor. Saylor actually changed the pinned tweet, which of course you have to assume he put a lot of thought into it, because the former tweet was this. The former tweet was Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. It was a technical definition of Bitcoin, right? The former pinned tweet, talking about how, the encryption protects the network. The network is thermodynamically sound, and it's also sound according to the truths of money. What should be the truths of the hard truths of the world? He changed that for, I think, a much more practical pinned tweet. The pinned tweet is much more practical, much more prescriptive. So what does it, let's unpack what the new pinned tweet says. Digital capital. It's digital capital. Bitcoin has won. Bitcoin is the global consensus is that BTC is digital capital. Saylor has been on this battle for a long time, calling cryptocurrency a misnomer. Unfortunate that a lot of early people in the early days called it a cryptocurrency. It's digital capital, not a cryptocurrency. Then, going on, the new tweet, the 4-year cycle is dead. What does that mean? That means that halvings do not move the price anymore. And obviously they don't when, of course, Saylor is buying more than the new supply each day already. The halving is already, the new supply, the impact of a new supply coming online is negligible in the stock, in the Bitcoin price now. It's negligible when you have just one single company who buys more than the new supply. So when the new supply is cut, the impact should be minimal compared to the impact of flows. It is the flows now that have the biggest impact on the price of Bitcoin. And by flows, he means two types of flows. The flows that are simply capital investments into Bitcoin, just holding Bitcoin, just like you would hold a stock, one form of flow. And another form of flow, of course, and talking his game here, is digital credit. Digital credit will likely determine the growth of Bitcoin as well as capital investments into Bitcoin by bigger players, like banks, for example, right? And that's perhaps going against retail. Retail does not move Bitcoin now. Now it's the big money, the big capital, the big credit that is going to move Bitcoin. And then he highlights the biggest risk. And this is why I say this is a very practical tweet, very prescriptive tweet, right? Tweet filled with advice. Iatrogenic changes are the biggest risk. What is iatrogenic change? That's harm by treatment. People with supposedly good intentions who try to change the protocol to protect it, and they go too fast, and then they end up hurting the protocol. If you follow Saylor, you know that he loves to tell the story of the early Americans bleeding George Washington to death through bloodletting because they thought that George Washington would survive a cold or something like that if they would drain him out of his blood. So that was people with good intentions who do harm. And he's talking about people who would advocate for protocol changes, saying don't move too fast because you could actually end up hurting the network by, making changes to the protocol where, I don't know, you can allow JPEGs or something like that. And so he's very conservative when it comes to the protocol. 4 different pieces of advice here and 4 different facts that he's trying to share with the world in his pinned tweet. But the pinned tweet, of course, being so important on X because it is the first tweet that people are going to read besides the description of the offer, right? So that's the top tweet. And of course, it's important to comment on that because Saylor is one of the biggest Bitcoin influencers, if not the biggest Bitcoin influencers. You have Max Keiser and you have Saylor, as far as I'm concerned. Maybe Adam Back, but he's less famous. As far as I'm concerned, there's Saylor and Max Keiser. These are like the super known Bitcoin advocates. So this is a big deal. And this is a big change. And of course, that change happened yesterday, Saturday. Okay, now moving on to the more usual Sunday video that I make here, which is he bought more, calling it back to work. He bought more. Now, I think he bought a lot. I don't know how much a lot is, thousands of Bitcoins, of course, but I think he bought a lot. Why? Because MSTR greatly underperformed Bitcoin this past week. It was a short week, a 4-day week, granted, so maybe Bitcoin would have recovered on Friday had the markets been open, but Bitcoin has greatly underperformed Bitcoin. Bitcoin was roughly flat, maybe up 0.5%. Strategy was down 8%. So on a week where Bitcoin is flat and when strategy drops 8%, what does that tell you? That tells you he's probably ATMing a lot. I think he ATM'd a lot. And I look forward to seeing that tomorrow on Monday. Also, Stretch. This was a successful week for Stretch, especially considering how volatile Monday was. Of course, we did not ATM on Monday, but we ATM'd on Tuesday, on Wednesday, and on Thursday, especially on Tuesday. ATM was especially strong on Tuesday on Stretch. Now, Stretch is closed at 100 on Thursday. It closed at 100. Hopefully it opens at 100 on Monday and we get another full week this upcoming week, another full week of STRC ATMing. But this is a big deal. Stretch is working. It's also noteworthy. I think I said it in my prior videos, but he didn't increase the yield. The yield is 11.5%. It's staying at 11.5%, which means that 11.5% appears to be the quote unquote the Bitcoin credit rate right now, right? And that's his goal is to create a digital credit rate. The digital credit rate right now, it seems, is holding at 11.5%. 11.5%. The natural rate for Bitcoin-backed credit seems to be 11.5%. And so my guess is that other instruments in the future that follow the Stretch strategy, they're going to have to pay a little higher than that in order for them to work, because strategy over the long run may be seen as kind of like the Bitcoin world risk-free rate, if that makes some sense. Kind of like you would look at super high-quality debt, like Apple's debt in the corporate world would be kind of like the floor, the benchmark. Well, Saylor's debt in the Bitcoin world would kind of act as the floor, as the benchmark, and it seems to be 11.5%. So anyways, Bitcoin makes everything better, and Bitcoin makes credit better. At least that is my view. This is not investment advice. This is not financial advice ever on this channel. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.